Not coordinating your Medicare decision with your accountant and your financial planner. These numbers are important, and there's actually fairly substantial surcharges if you go over just by $1. So for individuals, 88,000, and married couples, 176,000 is where the income level is, where you start actually having some surcharges. So I'll throw the chart up on the screen for you guys to review. But keep in mind, as these numbers go up, it doesn't just affect your B, but also your Part D. And these numbers are for married couples, each person. So, this can be pretty substantial. And the engine that drives all this is modified adjusted gross income, MAGI. You'll see that all over the place. There's things that we can do to impact it on the positive and the negative side. So the decisions we make, if we're close to these thresholds, are not that difficult. We just have to be aware of them. So without coordinating this with your other professionals, you could actually be throwing away quite a bit of money. So some of the techniques that we do as part of financial planning is converting traditional IRAs to Roth IRAs, filling up your tax buckets, making sure that you take advantage of some tax arbitrage opportunities. But when you're doing that, you have to understand if it pushes you into 1, 2, or 3 levels higher, that's a substantial cost that you have to calculate when you're weighing these decisions. Taking substantial withdrawals from retirement accounts, tax-deferred accounts, rather than more tax-preferred accounts. Not tax loss harvesting. That's another way you could actually lose some opportunities. And also, if you have a highly appreciated non-retirement account, as you rebalance it to perhaps get you back to more of a neutral weighting or recalibrate your risk, you're going to be selling some things at appreciation that are going to maybe trigger some capital gains and push you into another level. So just as a reminder, try to stay below these limits. Try to coordinate your Roth conversions within these parameters. Withdraw money from your Roth IRA perhaps to pay for that big family trip somewhere instead of taking it out of a 401k. Maybe using some cash or some principal of another investment. And if you do have highly appreciated assets in a non-retirement account, consider using that as your part of your portfolio that's not being rebalanced, that is growing, and only make strategic withdrawals from there. And then rebalance your retirement accounts where you can rebalance inside there without causing any tax impact, and use that to balance it out. So having a plan how you're going to manage your assets has a huge impact on your Medicare.